So welcome Ilaria and Graham. We have recently published our annual report and the market section takes stock of 2022 and also looks forward at 23. So let's start with 22. What a year. Can you share your reflections?
Yeah, what a year, Sam. We started 22 with the expectation that the global economy would be really picking up, be really strong as we came out of COVID and lockdowns. Of course, we then had the Russia-Ukraine war, which changed the picture quite dramatically. Particular price inflation took off. And if we look at Europe in particular, there was quite a deep impact on consumer and business confidence, hitting all-time lows. This also impacted supply chains. I mean, having gone through COVID and another round of disruption impacted inputs into agriculture, impacted inputs into the manufacturing system. So again, raising this issue of resilience and agility in supply chain. So quite a different sort of outcome to 22 than we'd been expecting. Having said that, consumer spending held up reasonably well throughout 22 despite all those headwinds, but we did see towards the end of 22 that starting to fade and becoming a headwind once again for our industry.
Absolutely. You talk about our industry and of course so many significant factors when we thought we'd actually be coming off the back of the pandemic and going into a very different year. So what has all those factors that Graham has mentioned here and others, how has that really shaped the industry in that way now?
Sure. Well, the logistics industry, of course, followed the economic cycle. And so at some point in the middle of 2022, we started seeing volumes changing. And so, for example, volumes of container trade going down, and similar case for air freight. So if you look at the full year for 2022, we see that there was a negative growth in volume. So it was in the range for ocean of -4% compared to 2021, and a bit more for air. Now, other segments followed the cycle a bit with a delay, in the sense that all in all, for example, for warehousing, this was still a very strong year. So by the end of the year, in vacancy rate, for example, was very low historically, something like 3% in the US. And we start to feel the pain of the cycle changing only now for other parts of the business.
So talking about the industry, but we can't talk about the industry without talking about the customer. What has been their experience of all of these sort of factors working on, I guess, how they run their business, and then, of course, what they need from a logistics partner?
Yeah, I speak with a lot of supply chain managers, and they tend to be a pretty hardened bunch. They've been through a lot over the last decade, but this has been quite exceptional. I mean, the series of shocks that have hit supply chain, from COVID then to the disruptions of the war breaking out in Europe, to prolonged lockdowns in China, really quite some deep and profound challenges they've faced. And it's accelerated a lot of the trends that were in place before COVID, so 2019. And two really stand out. This need for thinking about your supply chain more holistically in a resilient way, rather than driving it through a cost-centered mindset has really shifted. And as part of that, the need for partnerships with your logistics providers to ensure that you can have a deep strategic dialogue to ensure you're building resilience into the supply chain. So this has been quite a change of mindset for customers, realizing that if you don't have a functioning supply chain, you don't have a business. If you don't get the product into the hands of your customers, you don't have a value proposition. So this is the really significant shift, this realization that supply chain is key to the business value proposition.
I think there was one good change, though, at least from the point of view of our customer. The freight rates came down, yes, quite visibly during the course of the year. And this is actually a good thing for the industry, it's a good thing for our customers. And the reason for that is that those high rates were a symptom of something wrong in the system. So there's lots of congestions, and so the congestion started to ease, and this was reflected on the rates as well.
Absolutely, I'm glad you mentioned that. So if we now look at this year, 23 and beyond, what's in store for the industry, but also our customers? You've already mentioned that behaviours are changing. Can we dive a little bit more into that?
Okay, let's start with one thing that is changing rapidly, and that's the business cycle. So on the cyclical front, we're not looking at a great year, to be honest, because global growth is going to be below 2%. So that's not a good start for the year. There has been also this inventory correction going on, especially in Europe. So if you look how companies are destocking, this is obviously something that is impacting the whole industry in a big way. Then there is a lot of structural elements that are influencing supply chains, and I can name a few. For example, if you look at geopolitics, we are 1 year now into the Russian invasion of Ukraine, and there is no clear sign of things improving. And of course, that has very big consequences across the board. There is a different approach to trade policy that is emerging. So trade policy seems to react more to political priorities now compared to the past, where it was more a function of economic choices. There is a lot of changes all the time in technology, consumer behavior, and that's of course put a lot of pressure on our customers to be agile and react. And then there is this need for supply chains to become more sustainable and more resilient. And that's of course also an engine of change. And I think the interesting fact of the moment we live in is that all these things interact with each other. And so the total, the combination of the impact of these elements is not the sum, it's more the product. So we live in this sort of polycrisis framework that makes things very difficult to predict. It's all much more volatile than it used to be in the past.
With those volatilities that you mentioned, how do we then work to ensure that we can deliver for our customers, and also because their needs and demands are changing, matching the market situation, how do we even prepare for that?
Yeah. So first of all, we need to get our own sort of house in order and think about what's coming at us, what are the scenarios, what are the possibilities, and that's become a more complex exercise. As Ilaria just outlined, we have multiple elements moving, and we speak about this as probably one of the most challenging or disrupted landscapes in a generation. And when we have deep changes that are occurring that we haven't seen in the decades previously. The policy change is one, and particularly focused on trade policy. So these things take quite some deep thought to understand where they can lead us, and then we need to think about scenarios. And as part of that, we work closely with the customers. We spend a lot of time dialoguing with the customers, explaining our point of view, and trying to understand from them what they're seeing and how they're thinking about reacting to those changes as well. So that's a bit of a sort of iterative process. But again, the key things that come through are we can't predict it. Nobody knows exactly where we're going. So that requires a much stronger, closer strategic dialogue and understanding between us and our partners about what is it they need to do in the marketplace and how can we support them. And that requires building those trusting relationships that are quite different from the type of relationship logistics providers have had in the past, which have been very transactional, very cost-based. So this is what we see, and this is what we feel, and understanding the marketplace is complex, and a need for these much closer strategic dialogues and trusted relationships.
And you mentioned something about the inventory, because we know that is changing quite significant based on the demand and stuff. What is happening there, and how can things like visibility help when it comes to preparing our customer where maybe those orders haven't come in, or they're having to shift their goods from multiple different places? Yeah.
Maybe I can just pick up that a bit, because there's a lot of talk about visibility. And this is good. Of course, you need visibility to understand where the bottlenecks are, where your inventory is stored, and what's coming in and what's selling. So you need to understand that very well. But visibility alone is not enough. You need actionability. You need to be able to do something about it. And this is where, and you talk about change in the system, this is where this optimization of the network comes in, combining that visibility with actionability so you can do something about it in a commercially cost-minded manner. And so that's a new tool, that's a new technology that's coming into the marketplace, but it's key if our customers are going to be able to manage these volatile and changing market conditions. Ilaria, do you want to speak to the potential bullwhip effect that inventory overhang could lead to?
Yeah, no, definitely. I think that's important for this year, because right now, of course, this destocking that is in place is leading to weak volumes at the start of the year. But at some point, we expect that this, sometimes in the middle of 2023, will lead to a rebound in container volumes, especially. So I think it's important to keep in mind that we go from one extreme to the other, basically, because of this volatility correction that is going on right now.
Well, thank you for sharing your insights. And of course, people can find out more if they dive into our annual report and the market section, which of course covers 22, but also looking ahead at 23 and beyond. Thank you, Graham. Thank you, Ilaria, for your time.
Thanks, Sam.
Thank you, Sam.